We've got a special voice joining us now to make sense of all that's happening in global markets. Are the bears back, and how long are they going to be around? Madhav Dhar is joining us, veteran investor, needs no introduction, managing partner, GTI Capital Group. Makes sense for us, this correction in the US market that we're seeing. You know, one term that I heard being thrown around quite a bit was the fear of peak profits. Seemed a bit like peak oil. But what would you say? How would you describe the sell-off that we've seen?
No, I think it's just, it's actually very classical in the sense that you have had rising interest rates and a rising stock market for some time, and you get to a tipping point where rates start to bite, and it tends to happen at a time when the market's extended, profits have been very good, and people start worrying what the future will hold, both with potentially slowing growth and competing higher rates. And so I don't think it's anything unusual. What is unusual is just that you haven't had it in a long time, and people start extrapolating extremely low volatility, and it's the reassertion of an old-fashioned cycle which we haven't seen in 10 years, which is moving out of deflation into potentially higher rates, higher inflation, higher wages, which for the economy is a good thing, but it's not a great thing for liquidity. And as we all know, growth wins in the long term, but liquidity wins in the short term. And that's what's happening around the world, and that's what's happening in India.
So the correction in US, Madhav, is it likely to be similar to what we've seen in February earlier this year? And, you know, from that point, the market sort of made lows and rallied on. Or do you think this is going to be bigger?
Yeah, probably. No, I'm not sure it's going to be bigger. I think it may get a little bigger than what we've had. My own gut feeling is that we have another big leg up. This reminds me very much of the 93-94 cycle, the 98 cycle, where after a prolonged rise in the global economy, led as usual by the US stock market, the weak animals, the weak countries start falling first. And we've seen the exact same thing, that Turkey currency has corrected 50%. Countries with deficits, whether it's India or even Italy, have started to get damaged. Leadership narrows to just tech, and eventually everything gets hit. But that's not necessarily the end of cycle, and I don't think this market, which is now very extended, 10 years in both the economic cycle and the stock market, is quite done yet. I know it's a bit of a dangerous prediction, but my sense is we have one more leg up, simply because growth is still strong and accelerating, if anything. We can debate whether it's at its peak, but certainly this earnings season has been very good in the US. The yield curve, which is an important indicator, is not yet flat, or certainly not inverted, which is usually a sign of trouble. And importantly, credit spreads still haven't started rising in the US. So my best guess is a recession is 2 years out in the US, and if the recession is 2 years out, the stock market peak is probably 12 or 18 months out.
Okay, so you're saying the market may overshoot on the downside, so the correction could be a little bigger than February, but then you're saying we have another one last hurrah, right? One last big move higher, if to fresh highs.
I think so.
Okay.
I think so. I think I think the preconditions of a serious US recession don't seem to be there. It's very hard to have a serious bear market without the prospects of a US recession. So to me, the world is as simple as that. But every time interest rates go from zero to where they are, you're going to get some serious dislocations. And frankly, we've had very few, and volatility has been extraordinarily low. So this may seem a surprise and quite scary for people who are not used to it, but this is very normal stuff. We just haven't seen it in a while in a one-way bull market over the last 3 or 4 years.
Madhav, so the other big variable, global variable, is oil. Do you have any strong views there, where oil is headed over the next year or so, and the relationship
well, I have a strong view on the first part. Yeah, I have a strong view on the first question, and then not a strong view on the second question. The first strong view is I don't think it's a great global factor. I think it's utterly overrated. I think it's very important for small oil-producing countries. It's very important for small oil-consuming countries. It's not remotely important for global growth. In fact, oil prices are usually an indicator of growth rather than a predictor of growth. So oil prices are high because the global economy has done very well. So oil really becomes a negative factor when you have a massive oil shock. When prices go up without demand going up, which is what we had in 73, which is what we had in 79, that's when you get a negative impact on the economy, where the economy becomes a price taker of an artificial price. That's not good for the system. When the price of oil is simply going high because the economy is very strong, I don't think it's a material factor. Yes, it matters for India's deficit and certainly matters for what happens in the Middle East, but doesn't matter much to what happens in China and Europe and the US and Japan and the main drivers of growth. So I think it's overrated as a factor.
Well, you know, when you talk about oil prices, you can't really forget what kind of impact it has on the Indian markets. We've seen that sort of respite come in the past couple of days. Brent has gone back to 75, 76. But the Indian markets don't seem enthused at all.
No, because there are other things happening in the Indian market. Yes, I mean, I think it's certainly a bigger factor in India than it's in the United States. But I don't think that's what is really driving the Indian market. You have a major credit crunch, and we can get into what the problems are. And that's the biggest factor is the S&P 500 and what's happening to the US. That's the single biggest factor for India. The second biggest factor is what has happened to the banking system and the credit and the more recent credit crunch. I would say a distant third factor is oil, certainly in the way I analyze it. So that's the way I see it. I think besides the global factor, there are 2 or 3 negative factors in India and not a single positive factor, which is why the Indian market is down more than average, about the same with emerging markets, which is why the currency has taken such a hit. Because they have no real positive developments to offset some of it. The banking reform is going slowly. You know, GST is taking its time. Privatizations of Air India and everything else got shelved. So where is the reform momentum that otherwise you're just a boat drifting in the ocean? Oil prices go up and you get whipped around. There is no other current that's taking you the other way. I would bet you that suppose we were a year ago and GST was solved and there's some simple, straightforward thing. Demonetization had not happened. Air India had been privatized. There were other candidates. We had worked through the banking system, the banking bad loan system a little faster, and then oil hit us. I don't think it would have been as big a factor.
Tell us a little more about what your thoughts are with regards to what's happening with the credit crunch. When you're talking about the NBFCs, the liquidity crunch, which they're probably facing, NPAs from the banking space, are we staring at maybe something worse in the coming months, maybe even emerging from real estate?
Possibly. I mean, I don't think, you know, I mean, the good news and the bad news is it's been underway for some time. It's not the most recent credit crunch and ILFS and some issues with what we've heard about the other banks is a slight negative surprise, but this is something that has already been in the system. The state banks have underperformed. We know what's going on. So just the fact it's been addressed is a good thing. The fact it's been addressed slowly is not such a good thing. And I think the biggest thing, at the risk of getting philosophical, is that, you know, we have liquidity, and the banking system is the lifeblood of any economy. When the lifeblood of any major economy is more than half the banking system is state-controlled and state-directed, and there are misallocation of resources, you're going to go from one crisis to the other. And we have to get past that. You know, you have to step up and privatize some of these institutions, however, you know, blasphemous that sounds. I mean, we are at that stage where we have to do it. We don't at all question that VSNL, you know, that the private sector took over the public sector and telecom, and the world changed completely. That we accept. We didn't 20 years ago, but we do now. 10 years later, we accept that privatization of airline, not privatization, but private entry of airlines has completely transformed air travel for the better in every aspect. We don't question that. But somehow we question the privatization of State Bank of India. Why not? And we'll keep going from one crunch to the other, and you have an interesting dichotomous system that you have oligopolistic license for the big private banks, and they can make monopoly profits forever, which is fantastic if you're owner of these stocks, and the other half of the banking system is a complete mess. And we don't find this, dissonant, and that has to be addressed. Otherwise, this will keep happening every 5-6 years.
Madhav, just leave us with a blueprint roadmap for markets here in India. Would you say we've kind of put in the low somewhere around here, maybe a little lower than here, or there is a risk of a serious slip?
I think so. I think so. Yeah, I have no blueprint, but my operating assumption we are close to a bottom. The currency plus markets have corrected, depending what stocks or index you're looking at, somewhere between 20 and 30%. Economy is still fine and accelerating, if anything. Margins are still low, valuation still reasonable. So India is frankly in a different cycle. We're in an early cycle where the US is in a late cycle. So yeah, I feel that this was expected, and I'm not even sure it's overdone yet, but I think some bad news, both global and local, is getting into prices and the currency. And I'd be a buyer somewhere here, yes. And I think we get another big leg up.
All right, on that note, we're going to wrap up the conversation. Thank you, Madhav, as always, for joining. Always a pleasure listening to you and getting your views.